What is going on? Welcome back to Trending Stocks. Today, when you talk about SoFi, I want to go over some of the current data points, break it down on what is influencing the price today, and go over everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So SoFi is down 3.3%. 28.1 million shares have been traded so far in the trading day. 44 is the average. So today is a little bit lower for volume, but then again, it's Friday, so that's kind of normal. Today, there's been no news from SoFi itself, no SEC filings. So it is just piggybacking off of the broader market. And the market is reacting to bank earnings. So today, a lot of the big banks kicked off the day with earnings. So Brad Freeman did post this with JP Morgan and Bank of America. So a lot of the big banks did miss on a lot of the key metrics that investors care about. As well, they also did signal a little bit more of a slowing. So if you take that information, combine it with what recently came out about CPI, and you get fear, massive amount of fear. So this is exactly what is happening overall. And despite that, though, there is an analyst that is saying despite CPI and just a broader slowing in the market, you are going to possibly still see the Feds want to cut rates sooner rather than later. So I'm going to play this near the tail end of the video because I found this kind of interesting. But today there's been no recent analyst ratings, no upcoming changes for the upcoming forecast for their earnings. So it has been relatively quiet for that. In SoFi's case, it is more of a technical breakdown, so that's why it is going down, especially with everything I just mentioned. So I'm going to go over shorts, starting off with that. So currently shorts are returning 160.73 thousand shares, 13.47% of the free float is being shorted, 120.52 million shares overall are being shorted, and cost to borrow average is 0.78%, so a little lower in comparison to yesterday. Still, more than 10 million shares available to be shorted, and that is through Interactive Brokers short availability. So the fact that SoFi is red today and shorts are returning, I see that as bullish because they feel like it's not really justified. Because I think SoFi is getting grouped into being considered a bank, whereas technically, just based on a lot of the metrics, the growth aspect of SoFi, it should not be, in some regard, of course. So I feel like SoFi's earnings is going to be a complete 180 from the brick and mortar banks, but yet the market is just classifying it as that. So all in all, I see this as very bullish information. Looking at options though, $4.69 million in calls being purchased versus 2.7 million in puts. Sentiment wise, kind of evenly divided. So 44% of all the options being done today is bullish. So people are still anticipating SoFi to continue to trend up despite the breakdown in the technicals. Of the call options that are being purchased, there is a consensus for it to be above around $8 by the end of next week. And looking at puts, it is anticipated for it to be sub 750. So you kind of have both extremes for that. These are some of the transactions that have occurred on the secondary market above $100,000. So very little long investors are getting in. Clearly just people are taking a step back. A, is Friday, and B, there's just so much fear in the market. And a lot of analysts leading up to this day was saying that a lot of the big companies out there are going to be missing on their earnings. And as a result, that is going to affect a lot of the broader market and a lot of institutions in general, just to look at multiples. Who are they investing in? I actually see that as optimistic for SoFi because in comparison to the brick and mortar, other fintechs, SoFi is considered a pretty good discount, but nonetheless, it is still going to get dragged down in some regard with the broader market. But still, moving on, like I said, it is breaking down on the technicals. So with it at 791, it is below this S1. So currently trading between this S2 and this S1. So 715 is going to be that next strong support. This S1 it is still kind of flirting with it, so I wouldn't really consider it fully broken. But we'll just have to see exactly where SoFi does land by the end of the day, whether it stays in this S1 to the pivot or S2 to the S1. Regardless though, 920 is going to be the very strong next resistance point. A lot of volatility is going to be in SoFi's future, just anticipate that. That's kind of the moral of the story. But again, it's more of a technical breakdown that is happening with SoFi today. Number of retail investors are getting out today and have been consistently since around December the 19th. So kind of the peak. Looking at stochastic, you do see it at 9, so that is considered oversold. But despite the oversold status, you do see a small deviation, so red line above the black, showing a bearish sentiment. So overall, this isn't necessarily the most optimistic. So technicals are kind of breaking down. Options are somewhat neutral, and the shorts is bullish information. That's how I interpret all of this. Keep in mind though, I'm not a financial advisor. You guys always do your own due diligence. And hopefully with maybe some positive earnings coming out from SoFi, you're going to see a lot more analysts warm up to SoFi, because over the last little bit, I feel like, I don't know, it's been mixed. So some of the recent ones, Bank of Montreal, Barclays, and Deutsche, and then KBW recently came out as well. And actually there was an article written about that actual rating from KBW saying that how they are very wrong. So kind of interesting, because that was that X factor that caused SoFi to go down, what was it, 10%, 7%, something that day. Absolutely crazy stuff. But once again, I'm going to play this quick video, only about like a minute and a half from this, but this talks on how despite the slowing in some of the metrics and just the broader economy, there still might be rate cuts coming sooner rather than later, which in my opinion would dramatically help SoFi, which is at a discount stock. So let me know your thoughts.
Our next guest says that she expects the Fed to begin cutting rates in March. That's in direct contrast to Cleveland Fed President 𝗪𝗓𝗪, who will vote on interest rate decisions this year. 𝗪𝗧 said yesterday that March is likely too early for a rate cut. Ann Walsh is the chief investment officer of Guggenheim Partners Asset Management. And first of all, thanks for being here this morning.
Thank you very much for having me.
So yesterday, the CPI came out. It was a little hotter than had been anticipated, and when you look through some of the lines. Today we get PPI, and obviously we're all trying to figure out what the Fed does next. Where do you think we are on track with this economy? What do you think the Fed will do?
So, as was introduced, we do believe that the economy is continuing to slow down. Inflation is also on a disinflationary track. Yes, the CPI print at a headline level came out pretty hot, particularly as regards owner equivalent rent. But if you look through to the component parts of the report, that really still indicates that PCE, core PCE, which is what the Fed really looks at, is still on track to be right around 2%. And I think that's critical. Additionally, what we're seeing evolve in the economy is kind of a bifurcated economy, and that is there's those companies that are doing pretty well, and then there's sections of the economy that are really slowing down significantly. For example, manufacturing has been in a bit of a slowdown, if you not maybe a recession, if even over the last, say, 18 to 22 months. And so as a result, what we're seeing is this sort of bifurcation happening, and the economy is continuing to slow down. We remain in the camp of believing that we are still seeing a recession, although mild. It's always been our expectation that it would be a mild recession. And, you know, I tend to refer to it as a rolling recession, depending on.
So yeah, there you have it. So in reality, I think SoFi is getting dragged down prematurely, whereas as what she even mentioned, like, it's not necessarily, it's going to affect some areas, whether it be a mild recession or not, but SoFi has done so much to mitigate a lot of its risk within its business model. I feel like, I don't know, I'm not overly bullish. Then again, in previous videos, when I see SoFi is going to go down, I outright say it. So I just kind of say how it is. I really do like the stock, and this is why I still cover it, why I still own it. Just, if you don't know options, highly suggest researching them, because you can kind of benefit from its downtrend. But regardless, bigger picture, I think SoFi is definitely going to do a lot of good things. But let me know your thoughts. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. Give yourself a shout out. Have you been buying? Have you been selling? What have you been doing with SoFi behind the scenes? But with all that, hopefully everyone has an amazing weekend ahead of us. And with all that, I appreciate all of you watching.